yields. The most important thing is to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out, philsgang.com, philsgang.com. Hi, I'm Phil Grande at philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon. Welcome to Phil's Gang radio show and podcast. A lot to talk about this week. First, the market. What's going on with the market? Well, the market is rallying, and what it normally does, they're saying they're going to cut rates 25 to 50 basis points. Well, again, the normal is markets will rally into the rumor they're going to cut. That's what's going on. Now, you got to be careful because when they do that, as they rally on the rumor, when the fact hits, then it's usually a sell-off. Now, there's a big problem for Powell because if he wants to go 50 instead of 25, then you're going to have a big sell-off in this market. Because what it's going to do, it's going to admit that we're in recession. And first of all, you don't cut rates if you're saying the economy is good. And everybody says, oh, great, the economy is. Whoop, I don't have my cuts up. We'll get those up in a minute. We'll play some cuts. But everyone is saying the economy is doing well. Well, the economy is not doing well. And we know that because, again, if you take the 2-year Treasury, it's telling you the economy's not doing well. See, the bond market is the truth machine. Okay, it's the truth teller. And when you see the 2-year Treasury gone, okay, or going down, that's a problem. It's telling you we got financial problems. Now, add that to oil. And when you have oil tanking or prices going down, that's also telling you there's a major problem in the economy. So you got a couple things that are telling us, hey, there is a problem. Yields, 2-year Treasury yield going down, sending a message, financial problem. Combine that with oil. Oil's dropping down to $69 already. That means there's no economy. When you have oil going from $80 down to $69, it's telling you there's no economy. And the biggest problem is there's no economy in China. But all over the world, the economy's in trouble. Then what confirms it is gold. Gold has hit nearly an all-time high. People are worried. They're going to gold. So for them to come out and say how things are good and we got a great economy, that is just nuts. We're in a Goldilocks economy.
The fastest recovery in history of a VIX spike of the nature that we saw, and stocks ending the month near all-time highs and bonds ending the month very strong. We're in a Goldilocks environment.
Are these guys nuts? Goldilocks environment with a 2-year yield taking a nosedive, oil taking a nosedive, gold going through the roof, trade deficits going insane. Look at our trade deficit, $100 billion. That's a killer. That's like red flags. That's like red lights going off and sirens. When you have a trade deficit, $100 billion, that means skyrocketing unemployment checks. It's unbelievable. And when you have a skyrocketing unemployment and you look at the chart where unemployment is falling below its 18th month moving average, going all the way back 30 years, we've always had a recession. That's right. Every time. I'll give you a chart. I'll show you what I'm talking about here. This is insane. People who, the lying is incredible. Look at this chart. Let me make it bigger for you. This is insane. What a liars. These beige lines or pink lines represent recessions. Now let's go back, all the way back here to 1972. You see we have a green line. This is a green line and a blue line. Okay. Every time the blue line goes underneath the moving average, that's an 18 month to 2-year moving average. Every time unemployment goes underneath that moving average, bam, there's a recession right here. Right here, you got two of them between 1972 and 76, and then here again in the 1980s. Got another 2 recessions. And every time, what was the key that we're going to get the recession? What was the notice? You follow and see if the unemployment rate is below this moving average. And each time, here we go again, right here, 1992. More recent, here we are, 2000. Look at this, very clear. You can see here's the blue line, and it was above the green line and fell underneath its support, the moving average. That's the 18-month to 2-year moving average. Same thing here in 2005. And let's bring it up now to 2020. And here we are, 2024. Well, they nuts tell us the economy's doing good? And what? And that's why they're telling us they're not worried about a recession.
Manufacturing, residential construction, they're all quite stable. So we're not particularly concerned that we're heading into a U.S. recession.
That's just unbelievable, isn't it? It's just crazy what's going on. So we got some serious problems. And the market, everyone said, well, how come the market keeps going up? Because remember, the stock market is not the economy. And that's why you got to watch your bond market. Here's a good example. If you take a look at the 10-year Treasury, and you can see since May on my chart, we've had since April, we've had man, look at the decline, falling off a cliff. This is the 10-year Treasury yield. When that's falling off a cliff, going straight down, what is that telling you? Well, it's telling you the consensus is the economy's doing poorly, not doing well. And when that happens, when you have yields dropping, that's a great opportunity to buy what? Tech stocks or any stock that likes low yields. So what happens is the tech stocks start roaring. This happened since 2008. And take QE, which again did the same thing every time they went out and printed money, Bernanke, printing money and buys 10-year treasuries. The yields keep going down. And when the yields go down, the tech stocks love it. And the tech stocks keep going up. And because Wall Street wants you to believe, okay, that the market is the economy. So they can say, oh, look at the economy, pointing to the stock market. But no, when you look at the economy, it's doing terrible. And the bond market tells you the truth. It's going down. What happens is they can mask that because when you have tech stocks that love low rates, and when the market and the economy is so bad and bond yields drop on a 10-year treasury, that's the time to buy tech stocks, because tech stocks love low rates. Why? Because tech companies burn through a lot of cash, and they need a lot of money, have to borrow a lot of money. So when the stock market starts going up, with the tech stocks leading the way, they're saying, look how great the economy's doing. Isn't the economy doing terrific? Pointing to the stock market. So people go out and buy cars, and they, and especially with low rates, they go out and buy cars, and they buy houses, and they buy motorcycles and everything else because interest rates are low. I mean, look at a truck, for example. Man, you can't give them away now. You can't. They're so expensive. People don't have the money to buy them. But boy, when rates were low, people were out there buying because. What did they think? Because what they thought is Wall Street, remember, and the fake business news networks, these TVs, they're out there taking parking space in the consumer's head. Hey, everything's good. Look at the stock market. The economy's really good. Go out and buy. Buy. Go buy. And people go out and consume because they say, oh, well, economy's got to be good. Market's going up. No, if they understood the bond market and took a look at it they should teach this in every school, start in kindergarten, start in the first or even second grade. That anytime you see those yields going down, very simple, okay? Anybody could do this. You know the economy is in trouble, so you're not going to go out and buy a car just because rates are down. You're not going to go buy another pickup truck because rates are down. You're not going to go start a business because rates are down. It's telling you the economy's in trouble, but that's how it's masked. And talk about masking. My God. Look what they did to us. You're talking when Harris and Biden, oh my God, when they got into office, what were they telling everybody, right? Oh, the economy was terrible. The economy was terrible. Look at the mess. Look at the mess. The Trump left us. Trump didn't leave no mess. Are you kidding me? The GDP was what, 5-6%? Inflation was 1.4%. But they went in and lied. And because they lied, we've had now the worst 3.5 years of economic growth since the 1930s. They were left a beautiful economy, great growth, low inflation, and look how they screwed it up. Debt is growing faster than our economy. Every 90 days, Biden, Harris are adding $450 billion in new debt. What are you, nuts? Totally nuts? Interest expense alone is $3 billion a day. $3 billion a day. Unbelievable. And the biggest, you talk about masking, going back to masking and lying, the biggest contributor to our debt and inflation was the $369 billion climate change bill, the new green energy bill. Think about it, $369 billion. That was the largest spending measure ever. It was the largest spending measure ever in history. It was the biggest inflationary measure in history. And so they knew that. So what did they do? They turned around and they masked it by calling it the Inflation Reduction Act. So here, they knew they're spending $369 billion. They knew this climate, this green energy was just stupid. And $369 billion, the largest spending ever in a bill. And it's all inflation. It's all because we don't have the money. So they have to print it. It's all inflationary. So the way they fixed it was by naming the most inflationary bill, the non-inflationary bill. I can't remember the name now. Non-inflationary. Inflation Reduction Act. Yeah, I get so angry when I think I can't even think straight. So that's what's going on. Now, so again, this climate bill was never intended to reduce inflation. It was intended to prop up the failing Bidenomics bill. That's right. That was the intention behind it. All this green energy, BS. It was to prop up the failing Bidenomics. Bidenomics didn't work, so they had to have a way to prop it up, and that's how they got the money to do it. But they called it, we got to fight inflation. We'll call it the Inflation Reduction Act. What are you, nuts? This is crazy. So and think about this. Biden and Harris, with the Inflation Reduction Act, naming it that, they did that in the same, to mask what was going on. They did that in the same way Obama and Biden concealed the incredible high cost of health care by naming it the Affordable Health Care Act. Are you kidding? When it was nothing but expensive. There was nothing affordable about the Affordable Care Act. So think how these people think, these politicians. Here we are, right? They went out and increased inflation up to yin-yang, and they said, we'll fake everybody out. Let's name the bill the Inflation Reduction Act. And just like they did with Obama's health care bill, naming it, hey, it's not affordable. What should we do? Well, then let's call it the Affordable Care Act. How's that? Wow, that's cool. What are you, nuts? So we now know without any doubt that the Inflation Reduction Act increased inflation just crazy, as did the Affordable Care Act, increased the cost to health care. So I don't understand how people, especially folks in Pennsylvania, are going to risk and take a chance on Harris. Can you imagine these people, these politicians who lie to us and who mask all this? Remember Pelosi? Well, we got to pass it to see what's in it. Can you imagine Pennsylvania? 266,000 landowners get a check each year for $6.5 billion. So the aggregate of 266,000 landowners, they receive $6.5 billion in royalties on fracking. They going to risk that and think that, she's going to keep her word? What are you, nuts? Hey, we'll be right back. Join my gang, free for 10 days.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
The bond market is screaming that this Fed better go, and if not go 25, certainly go 50 when you think about September.
50? You want to see the market crash? Yeah, just cut rates by 50 basis points. This market will tank so fast. Are you kidding me? Unbelievable.
50 basis points sends the wrong signal to markets. It might signal that the Fed thinks actually there's something more sinister going on in the economy and that we ought to be worried.
No, let me tell you what it really means. 50 basis points, it means we're in deep trouble. Not only are we going to be in a recession, okay, we are in stagflation, okay? We have a good chance. I mean, this could really take us down. I mean, really. And think about this. This whole stock market since 2008, 2009 has been fake. It's been fake. It's been on zero rates. And what did zero rates do? Drive 7 stocks straight up for 12 to 15 years. That stock, those stocks driving this whole stock market created an illusion we had a great economy. Things were great. And when you could go buy a house and have a 2% mortgage, 3% mortgage, you could buy a car and pay almost no interest at all. People were thinking we're doing well when you're not doing well, just the opposite. You know, we're almost at a point right now. There's no place to go to. There's no place for Powell to turn. No matter which way he turns, he's going to screw up this economy. It's already screwed up. This is what happens when you keep rates too low for too long. This is what happens. And then you wait too long to cut them. So nothing is going to work. Nothing is going to work. So, and here's the other reason. Stop telling me, Powell, the reason that you're going to cut rates is you're going to try to drive loan demand, that you're going to help Main Street so they can go get loans and get the economy going. Really? When you cut rates, it's telling you your economy sucks already. It's too late. When you cut rates, it doesn't mean you have a good economy. It doesn't mean you're going to improve the economy. When you cut rates, it's like a Hail Mary pass. You're hoping to hell you cut rates and the economy can start turning around, people borrowing money, and that the economy can start growing. Our economy didn't grow. Ever since Harris and Biden have been in office, we've had the worst growth in history. Don't take it from me. Go look it up. The worst GDP growth ever. Now, so they used this climate change law, okay, to mask what they're really doing, right? And think about another thing they've been masking. We are in deep trouble because not only do we have a problem with the trade deficits, to say they're going to cut rates 25 to 50 basis points when we have gasoline up 45% since Biden took office in January 2021. Eggs are up 75%. Groceries up 45%. Used autos up 25%. Rent, shelter is up 35%. Wait a minute. When they talk about inflation going down, they take those items that we don't need. They're taking appliances, for example. They're taking furniture, stuff like that. When they say inflation's coming down. Honest to God, why do you think they take out of their numbers? They always give us our producer numbers, the PPI and CPI, but they always take out gasoline and they take out food. What the hell is that? Put them in there, for God's sakes. Gasoline was up 45%, eggs up 75%, groceries up 45%. Put them in there, because when you take them out, you're just lying to the people. But let's go to what else they're masking. The banks, that's right. So, first of all, when you have trade deficits at $100 billion, you're screwed. That's telling you, man, okay, you have a real problem. It means big-time unemployment. And where does all our unemployment coming from? The worst place possible, tech. Do you know unemployment in tech is up 6%? 6%. That's higher than our overall unemployment in the country of 4%. So I told you, Powell lied when he said the rate cuts were to help, to aid the consumer, to help you on Main Street so you could go borrow money. He's a liar. That's not what he was doing, okay? The 2-year yield, as I told you, is telling us something different. Something's worse. Something's happening. The underpinning isn't working anymore. It's another banking crisis. Do you remember the regional banking crisis that we went through? Remember the regional banking crisis 2023? Do you remember First Republic, New York Community Bank, Silicon Valley? All those 3 banks went down, right? And that crisis will look like a snowflake compared to the crises that are going to start in the first quarter of this year, 2025. What am I talking about? In the last 5 years, we've all known that commercial real estate is in deep, deep trouble. And they've been able, over the last 5 years, turn over or roll over enough loans to prevent a crisis. So that's why you don't hear the press talking about it. You don't hear anybody talking about it. They don't want to talk about this atom bomb that's sitting there, okay? But now it's over. The bulk of the rollovers, the refinances, start in the first quarter of 2025. Remember all these house loans, you can pick your own payment, right? And then 2 years later, 5 years later, now you got to go back to the original payment. This is what happened. Finally now, time has run out. So the banks are facing nearly $2 trillion in a rollout. Notice, refinancing. Banks don't have $2 trillion because they have more debt than they have assets. All banks do that. Matter of fact, most banks don't have money. So they haven't told anybody. Now remember, let's go back to the 3 banks that went under. Now, that banking crisis, they weren't worried about the banks going under. That's not what they were worrying about. They didn't care about the banks because what does Wall Street love to do? And the big boys, okay, who are in charge of the Federal Reserve. Who owns the Federal Reserve? The 5 largest banks in the country, those CEOs. And who controls the Federal Reserve are the 5 biggest CEOs. They love to see regional banks go down because they don't have to go buy them. They go in and they buy all their deposits. So when the banks went down in 2023, Silicon Valley, First Republic, and New York Community, when they all went down, they didn't give a damn about the banks. All they cared about was the depositors. They didn't have enough money to pay the depositors. So what they did is they put together what they call a bank term funding program, right, to bail out, not the banks. Everybody thinks that bank term funding program is to bail out the banks. No. It was to take care of the depositors. And let's talk about the depositors right now. Do you know the FDIC, that nice little sign, you go in the bank, you see, insured by the FDIC. That's a bunch of crap. They can't insure you. You know right now, if when these banks all go down, these not the big boys, these regional banks, the FDIC has only enough money to cover 5% of the outstanding deposits in the nation. 5%. So if you got, let's say, $6 trillion in deposits and they all think they're safe, only 3%, not 5, 3%. Now remember, when Trump was in office, when he first got into office, this is one of the things he wanted to take care of. And what he was doing is pressing Congress, the Democrats, hey, listen, you got to work with Republicans here because we got a real problem. Because if these banks blow up, the depositors aren't covered. I mean, can you imagine $6 trillion would say there's deposits, and think of it this way here. You're only going to get, let's say, 3% of the money you have in your deposit. So if you got $50,000 in the bank, $25,000, you're going to get 3% of that. That's right. So Trump understood this when he took off. This was one of the first things he wanted to do, is to force the FDIC to raise the premiums on the banks. But the Democrats wouldn't do it. Why? Because the Democrats get all their money from the banks. I'm talking about election money. Look at all the money they get. Look at Hillary Clinton. Look at Obama. Look at the money they get. So he kept fighting. He couldn't get it through because the Senate's controlled by the Democrats, and they wouldn't put it through. So right now, what's going to happen? We are going to have the biggest banking crisis ever in regional banks, and guess what? The FDIC will not be able to cover the money that's in your deposits. Now they're able to take care of 3 banks with the Bank Term Funding Program. How are they going to take care of 122 banks or 222 banks? They can't. So this is going to be a big crisis, but nobody's talking about it, right? Nobody's talking about it. They don't want to talk about it. So can you imagine they would not increase the premiums because of politics? They wouldn't. I'm sure the Republicans would do the same thing, right? But still, why aren't they looking out for the people? Because Washington doesn't look out for the people. It's all about the power play, right? And money. So again, I'm just reading here. I'm really wrong. The FDIC, they can't cover 97. Boy, I was really off. 97% of the deposits. This is insane. So that's what's going to happen in the first quarter of 2025 when whoever gets in there, right? That's not a good deal. Now, we're being told that everything's fine. Everything's fine. Not to worry about it. Everything's fine. Well, you better worry about it. Investors have a lot to worry about, I'm telling you. Why? Well, one thing I'd be really worried about if I were in business, Harris is making anybody in business pay taxes on money they haven't yet received. That's her new thing. We're going to get the rich. We're going to get the rich. Do you realize how that is going to destroy this country? Can you imagine taxing you on your next year's pay, taxing you now on your 2025 pay? Well, that's what they're going to do with businesses. I mean, she's a Marxist. There's no question about it. I'm not trying to turn this into a political show. This is a business show, but I don't know how I get around that. But again, if Harris, think about this. The national debt right now is at $35 trillion. Every 90 days, her and Biden are spending $450 billion we don't have. So that's being added to the national debt. What are you, nuts? Harris' plan now, okay, according to all the numbers, the Democrats, I'm talking about even the Democrats, they went through the numbers. She's going, all her projects and programs going to add another $2.2 trillion. And now, remember, these are going to be laws she's going to pass. It will, by 2034, that will be $16 trillion is added. So when she leaves office in 4 years, we're stuck with this thing to 2034. You talk about inflation. What are you, nuts? This is crazy. So again, we lost in 2023 1.6 million full-time jobs. Remember, it's all about labor. They keep telling us how strong labor is, how strong labor is. Labor is so strong, right? No. In 2023, we lost 1.6 million full-time jobs. That's insane. They were replaced by 1.8 million part-time, mostly healthcare jobs, and mostly government jobs. There's the real problem. Government jobs. Do you know that 40% of new jobs are all government jobs? and 30% are healthcare. So in essence, 70% of our labor market are government employees, government jobs. That's a deficit. That's called deficit spending. They don't create any revenue. You and I got to pay their salary. You and I. They don't contribute anything. So this year, we've lost so far 13,000 manufacturing jobs. The majority of the jobs are the tech industry. This is insane. And employment in the last 12 months, Biden-Harris illegal hires increased 637,000, and the American employment fell 300,000. Look, for more information on my Phil's Gang, we've been teaching for 25 years. Let's help you free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to